Hello everyone guys, welcome to chapter 1 and today we'll be covering introduction to accounting. So here is the learning objectives that we will today define the accounting and what is the purpose of accounting. We will discuss about types of business entities, identify the users of accounting information, and the last one, compare financial accounting with the management accounting. Okay, let's get started. Okay, let's define the accounting. What is accounting actually means? This is the process of recording every transaction that happens in business daily basis. For example, a company buys goods or pays salaries, and these all details should be recorded. Keeping this systematically writing down the financial transaction as they happen. A day happens. So after recording these transactions, we need to summarize them in order to see the clear picture of the business, whether the entity is making profit or loss at the end of the year. By summarizing the information, the company can prepare financial statement, or statement of profit and loss at the end of the year. So as you can see here, recording every transaction helps us to produce financial statements at the end of the period. For example, a company records daily sales, summarizes them monthly. At the end of the year, prepares financial statements. Financial statements is the clear picture of the business of business activity. Uh, is really business making a profit or not? You can see from the financial statements. The clear picture will be shown there. Okay, let's move to the next one. There are three main types of business entities. There are sole trader, partnership, and limited liability, LLC, or we can call it LTD. Okay, let's look at the first one, the sole trader. Who is the sole trader? Is a business owned only by one person. The owner controls everything and makes all decisions. And however, the sole trader has unlimited liability. This means the owner personally responsible for all debts of the business and responsible for everything. If the business has a problem, the financial problem, the owner must pay with the personal assets. Okay, the partnership is the business owned by two or more people. The partners share the responsibility, and they have also unlimited liability. This means they are personally responsible for their business debts. And the last one is limited liability company, as we call it LLC or LTD. This is owned by shareholders. This type of business, the owner have limited liability. This means they are only responsible for the amount they invest, and the owners are legally separate from the business, so their personal assets are protected. They're only responsible, and they only care about the money that they invested to the company. Okay, let's have a look at the next one. Who use the accounting information? Identifying internal users and external users. There's two main types. Let's look at the internal users. They are the people inside the organization. They are owners, managers, and employees. For owners to know the profit, or the financial position, and to be aware of the financial position of the company, and the managers to make decision and budgeting them and performance evaluation. Employees, and of course, If the company making strong profit, employees may expect bonuses or salary increases. If the company is struggling financially, they may worry about job stability. So that's why it's really important to employees know about financial position of their company. Let's look at the external users. The first user is their investors. They will decide whether to invest money or not. And according to the financial statement of the company, they will decide it. Creditors or banks, they will assess the ability to repay the loans. Before giving a loan, bank will check the company's financial statement to see if it can repay the money or not. So the next one is a government. Of course, for the taxation authority should be aware of their activities and how much they profit make in order to pay the tax. And the suppliers. Suppliers use accounting information to evaluate companies' creditworthiness. For example, before selling goods on credit, supplier may check whether the company financial stable to pay them or not. The last one is customer. Of course, to plan to sign long-term contract, they need to be sure the company will continue operating in the future or not, and this also they will judge through financial information, financial accounting, especially accounting information. Okay, this is all. Let's have a look at the management accounting. We have to differentiate between management and financial accounting. Firstly, let's look at the purposes. Management accounting helps to internal management to take a decision, while the financial accounting helps the external users like governments, investors, like external stakeholders. About timing, the management account usually prepared once a month, while the financial account prepared once a year. There is no any kind of strict rules for management accounting except the manager's preference and needs. And while the financial accounting should follow the rules and the standards like international financial reporting standards. And of course, management accounting focuses more in a future-oriented plans, whether they have to pay more for advertising, for example, right? Or make a better any kind of decision in the future. They will focus on the management accounting. Okay, the financial accounting is they are looking for historical data. Well, they will show the profit or loss as we have discussed it earlier. So this is the all for today's class guide. Thank you very much.